If you've been following my channel for some time now, you know I like to compare. I like to do this comparison between two funds that are more similar, but they always confuse people, and people have hard time to decide which fund out of those funds, either one or two, three, which one should you invest your money. And on this channel, I make that simple and easy because I'm going through the performance, I'm going through fees, I'm going through the composition of these two funds or three funds whenever I talk about either two, three, four, and that makes it clear for you which out of those two, three, it's good for you to invest your money, and which will be has better performance, and that will give you good return. So again, today I'm going to compare between the two funds. These are funds, ETF. It's more of blend if you're an investor who is looking for an income but also growth at the same time, right? These are the ETF. One is from Vanguard, another one is from iShares or Blackrock. So but before I go deeper into this, someone actually asked a question about VDY, which is Vanguard FTSE, Canadian high dividend ETF, versus HMAX, for example. It's like, which one should I invest my money? And I just want to make a comment on this one. First of all, on this channel, I just talk about these cover call ETF or funds and anything like that. It's just more for information purposes. It's not really 100% financial advisor advice, right? Because I'm not licensed. What I would say is this: these two funds are designed with different purposes, right? Because if you invest at HYLD, for example, it's purely for people who are looking for higher monthly income, and it uses strategy of covered call ETF versus VDY Vanguard high dividend yield is more for dividend, but the dividend is very small. It's about 4%. Yes, it would give you more bigger growth than the overall Canadian market, but this is it's purely growth and income at the same time. So if you are looking for higher monthly income, with and you can take the risk, and then the HOLD, those kind of funds will be better for you. But if you're just looking for overall growth and income at the same time, I think VDY, it will be VDY or XE, or the other fund I'm going to talk about. Those will be the fund for you to invest your money. So let's go and talk about these two funds. Before I go ahead, if it's your first time, just make sure you subscribe, or if you like my content, please like, because I always talk about these type of funds and type of ETF, and also I bring if there's any news, anything like that related to your investment portfolio, then you'll be able to know what's going on in the market. Okay, so let's discuss about this. These are VDY, which is Vanguard FTSE Canadian High Dividend Yield Index ETF. And you can see the flag there. These are traded on Toronto Stock Exchange. They are Canadian ETF. I mean, it's Vanguard is American company, but of course these are ETF that are traded on Canadian market, right? There is also the there's also a US version. If you're a US investor, there's it's called VYM, which is also the same pretty much, Vanguard high yield dividend ETF. And we are comparing that one from Vanguard to this one from iShares, which is XEI, which is iShares S&P TSX Equity Income Index ETF. So we will look at overview. First of all, the price. This one is about $42.91 as of today, and this one is today is May 1st, and this one is $25.72. As you know, the price doesn't really matter too much. They both, you can see the performance over the day. They're all like about 0.27% down. This is 21%. Assets, they're all equity, 100% equity. They don't have bonds or fixed income in them. When it comes to benchmark, this one follows, or the Vanguard follows FTSE Customs Canadian High Dividend Yield, and while the XEI follows the S&P TSX Composite High Dividend. So two type of different indexes that they follow. When it comes to asset and management, we can see the Vanguard has the most money, has about $2.12 billion, where we have iShares Equity Income, or XEI, has about $1.5 billion. When it comes to MER, MER we will look at, we can see the iShare one has the lowest MER of 0.20 versus Vanguard has 0.22. So when it comes to asset under management, first of all, when it comes to benchmark, they are both pretty much the same. When it comes to asset under management, we can see Vanguard has the most money because most people go with the name Vanguard, they love it. When it comes to MER, of course, iShare wins on when it comes to MER. Management fee, they are the same, but what matters for most DUI investor is MER, because this includes the management fee and all the fees together. So when it comes to who is the sponsor of these ones, the person who actually created these funds and they put all the money together is Vanguard Investment Canada Inc. Of course, is Vanguard is globally. There's a Vanguard US, Vanguard, but it's an American company but has branches also in the US. So here we can see it's Canadian. Of course, this is Blackrock Asset Management Canada. So just to give you a little perspective, Blackrock is the biggest asset management in the world, right? This is iShare. iShare is a product, but this is the Blackrock is a company itself, and followed by Vanguard, which is the second. So these are the creme de la creme, the creme de la creme when it comes to money and investing. So just so you know, if you didn't know about that. A key information: the price was 42, and this is 27. Ask a bid price is 1K, 1.3K. So there's more people who are, there's more volume on iShare versus Vanguard. It seems when a day's range was 42.91 to 43.20 and 25.72.25. That's not a big deal, but end of the day, the week range is between 38 to 46, and this one was 23.28. When it comes to performance now, because this is one of the important things we invest your money for, right? When it comes to performance, distribution yield first is about 447, and we come to distribution yield on iShare is about 481. So when it comes to when it comes to distribution, we have iShare wins with little bit of points. So iShare has won so far when it comes to MER, as lower MER, and also the distribution yield. And Vanguard has won so far when it comes to the biggest, who has the most money invested in. So that means the most money you invested, the more people trust you more than the other guy, right? So that's the thing. But now let's look at what matter the most. Now it comes to performance. Year to date, we look at the Vanguard is lagging behind iShare. iShare is about 283%, where Vanguard has it's 1.551. So on a year basis for today, this year to date, iShare has beaten Vanguard. But let's look for a long term, 1 year. 1 year from so May 1st last year to now, we can see they're pretty much almost have the same performance. But of course, Vanguard, iShare actually has beaten the Vanguard. When it comes to 3 years, iShare has outperformed Vanguard. When it comes to 10 years, we look at the 10-year period, then Vanguard at this point has outperformed the iShare. So, in the long term, Vanguard seems to be outperforming the iShare, but in from 1 to 5 year period, we look at in a short period of time. Of course, iShare has won this battle. When it comes to top holdings, top holding that they invest in, we look at the first one in Vanguard. It's Royal Bank of Canada, right? This is RBC, 14%. Where the top 10 of this guy, they are very small when it comes to percentage. Where 10 holding on the Vanguard, they put big chunk. For example, 14% all in RBC. We have Toronto TD Bank 11%, Enbridge is 8%, Canadian Natural Resources 6%, Bank of Nova Scotia, Bank of Montreal, Suncor, BCE. This is telecommunication. We have TCE Energy, about TransCanada is 4%, Canadian Imperial Bank. So one of the top 10, which takes about total of holding about 69% of the portfolio. it consists of banks and energy company. That's on, and the reason why, of course, banks pay more huge dividends, and also they are one of the best performer uh, in Canada when it comes to Canadian market. When we come to um, iShare, they actually put a little bit of utility. There is Fortis Inc., which is more of a utility company. There's Suncor, there's Bank of Montreal. Total holding of 10%. It's the 10 biggest company only constitute about 48%. So they are more diversified on this front. So and but they also have, of course, telecommunication, and look at the first top 10. There are two telecommunication company. um that's it for these two funds. So which one would I pick? For me, I think the winner right now, I would go with I would, I'm going with iShare, because I think iShare has lower MER and also has outperformed in a shorter period of time. And the price also, like, if you don't have as too much money, I think the price is pretty good. It's 25. So let's say you have $50, $100, you can get 4 shares. Versus this guy, if you have $100, you can get only 2 shares. Not that it matters too much, but psychologically, the more share you have, kind of it feels better that way. So in this battle, I would give a winning to XEI, which is iShare S&P TSX Equity Income ETF. And this video is a little bit different than the other. I've talked about HMAX and HYLD and other covered call ETFs. So if you want me to compare more ETFs, actually I'm going to make a video to compare between actually these two, VYM, which is Vanguard, high income, but this is a US stock market, right? These are they are American ETFs. So VYM, which is Vanguard high yield ETF, and I'm gonna compare with SCHD, which is a Schwab income ETF. These are one of the top in the US when it comes to dividend income. And by the way, these ones also, they pay the monthly, so this is pretty good for someone who wants to cash in monthly income. So that there you have it. If you want me to compare more of an ETF, or which one do you think you'd be more willing to invest your money into, so let me know. Thanks for watching, and again, if it's the first time, just make sure to subscribe and hit the bell button. Thank you. Till meet again.